We've seen, well, we know that you're supporting the company tax on principle, but what do you make of this suggestion from Senator Hinch, exclude the banks?
Yeah, I'm afraid Darren must have dropped out of Economics 101 with a fail. Honestly, he's got no idea. Who does he think owns the banks? It's Australians. It's Australian shareholders. The banks are not some kind of entity unto themselves. They're just a collective of people owned by their shareholders, the vast majority of those shareholders being Australians. So a company tax cut for that doesn't include the banks would mean all of those shareholders have to pay more taxes via their ownership of the bank than other Australians who own other companies. It's absurd, absolutely absurd.
What's your read of the situation at the moment? Because Senator Hinch doesn't seem like he's across the line. He is one of those holding out perhaps most on this issue. But do you think it is close to passing? What kind of deals are being done behind the scene? Please enlighten us.
Oh, well, there's some deals that are occurring. If I told you, I'd have to kill you. But the ones that we know about, yes, it's close. I understand Matthias Cormann believes that he's fairly close. He's close to. He needs 8 out of 10, as you know, and 9 out of 11. He's got Cory Bernardi's proxy, effectively, a pair, and he's almost there. So you can have 2 that say, "Well, I'm not going to vote for this," and he's still got the numbers. What sort of deals is he doing? The one that's in the public domain now is the one he did with Steve Martin from Tasmania. So Steve Martin has convinced the government to put some money into a few Tasmania initiatives, and they don't add up to large amounts of money. And he's got across the line. He accepts, in fact, the principle that a company tax cut is good for business. It will increase investment. He's agreed that that's true.
Now, I take it that if the government was to capitulate to Darren Hinch in some kind of alternate universe, you would no longer be on board with that situation. But one of the issues that has come up today, if this company tax does go ahead and passes in the next couple of weeks, do you have a problem with the banks using that tax cut to fund more share buybacks?
No, I don't. A share buyback just means that some of the owners want to sell their interest in the banks, and that will raise the value of the ownership of the other shareholders. It doesn't really matter. They're very temporary things. Tax cut is forever. So even if they do that, all it'll do is reward their shareholders, either by selling their shares or seeing the value of their shares increase. But they don't hand out all their money in dividends. They retain some of it for investment and growth. That's what's supposed to happen. When the taxes go down, they don't hand as much over to the government. They have more then for both dividends and for investing in growth and expansion.
But David Leyonhjelm, that seems to go against some of the assurances we've seen from big business that this company tax cut will go towards rewarding workers, seeing wages growth and seeing more people employed.
Well, when a company invests in its future, expands, opens new divisions, sets up branches in new areas, offers new services, you know, all sorts of things that banks would like to do and can do. They need more people, and they need expertise. Some of their internal staff will put their hand up and get promoted. They'll get salary increases. I mean, you don't get a salary increase just from being there. You do have to actually work for your money. But the assumption is there'll be plenty more opportunities for you to contribute to the bank's future profits, and as a result, you'll be paid more.
Senator, thanks so much for your time today. We watch the Senate with bated breath. Thank you.